Hey traders, TG Watkins here. It's December 23rd when I'm recording this, and remember, it's going to be kind of a shortened week. We have Tuesday, which is a half day, the day before Christmas, and then obviously Wednesday, the Christmas, is going to be closed. And then we're back on schedule Thursday and Friday. So let's see what the market wants to do with this kind of holiday situation. Now, I know that last Wednesday with the FOMC was kind of a big scary thing, and lots of records were kind of met and reached, and the VIX went up and all that kind of stuff. And it really was, it was a huge down day with a little bit of follow through the next day. But then we could just, from a technical standpoint, say that the market was getting pretty stretched to the downside. I'll show you another indication of that. But then we had PPI come out, and it seemed okay. It wasn't anything too crazy, and so the market was able to just turn around and run up and get a nice big move like that. And so far, this is all actually moving the way that I tend to look at it through the Moxie lens. So from Friday to today, Monday, we had price pull back into the 15-minute 50, and it held. That's great. That's what we were looking for, and we actually took a trade, a put credit spread, and we got 99% out of that one, so that was good. And you could even see that this is an elf shoe. Leg, heel, arch of the foot, ball of the foot, and then we get our elf toe. And the thing I have been looking for, and what I've been telling my subscribers is, I said, basically since this happened, I said, we're not entirely sure of the path, but we should look for price to revert back to the hourly 50. Now, this could still just be a bounce and a downtrend, but I said that should be kind of the first thing that we're looking for. The other thing that I wanted to show you guys, because there is a possibility that we could get another leg lower and have to see what that looks like. But here, kind of making this going back to July, end of July and beginning of August, you can see that here's where we got price to kind of come back to the hourly 50, did a little whoop-de-doo there, and then we actually got over the hourly 50, and even though we had that big move, we still went lower. Now, again, that was kind of a special situation and all that, but I do want to show you that we had price over the 50 and the Moxie indicator below 0. So that's kind of one way to look at it in case we do go lower. I think we need to bounce. I think we need to go up before we go lower if we are. But then the other thing, let me kind of show you this, because this is breadth. So this is the number of stocks over certain moving averages. And we've been looking at this, the 20-day and the 50-day. And you can see we went from 82% of stocks above their 20-day moving average down to 8. So we got 8% of stocks over that. And you can see the last time we had something like that was pretty much the bottom. So, yes, of course, the market doesn't just go straight up after that, but that is some washout levels. And the number of stocks over their 50-day SMA got down to 20%. That is extremely low. Basically, you look at something like that and you're like, I don't think it can go much lower. And we're not in a bear market. So I think underneath the surface, a lot of things really got repriced and written down. And I kind of think that, maybe the market needs to get itself straightened out, and maybe there could be another little dip or something. But I think by and large, most of these stocks already got wrecked. And another way of looking at this is you look at the IWM and you're like, wow, yeah, that's pretty bad. And people are kind of wondering like, oh man, is this over? Are we done? Are we not going to go up anymore? And I kind of look at this and think, well, we don't know yet, but I do think that this is going to be the low, because wow, that is super far down there. And if you just kind of look at the recent past over the last year or two, you can see that basically dips do keep getting bought up. So I'm going to continue to lean long, because a lot of the positions that we have are still doing well. And so far there was a buy the dip, and we have been seeing some strength, and my accounts are still up even today. And other than the Wednesday action, things have rebounded. The only thing that hasn't really rebounded is Bitcoin. Let me just show you. I can, BitX, just as a way of looking at this, still down. And I think that's okay, because we can see that if you look at Bitcoin, yes, it broke over 100,000 pretty well, but it was too overbought, and it wasn't really ready to keep going. Basically, Jerome Powell coming out there and talking about being a little bit hawkish, saying, we're not going to have as many interest rate cuts in 2025. That kind of said, oh, okay, we might need to reprice a few things and probably slow down on some of this stuff. Because I'm sure he's looking at the market and could see that things were really kind of getting a little bit frothy out there. And so he needed to tamp that down a little bit. And if you look here at Bitcoin itself, you can just clearly see this was getting a little bit up there, a little bit overheated. And you know what? This pullback, pretty reasonable so far. It might continue to come down a little bit, but basically I'm going to look at this and say, you know what? It's probably just a pullback and an uptrend. So just a pullback in an uptrend. So we just have to be patient. I think things are still looking pretty good, and you just have to decide how you want to handle this kind of action, because not everything goes up in a straight line. I will continue to refer to all sorts of examples that I have, but Carvana has been a decent one. And you could just see here, pull back, pull back, pull back, pull back, pull back. And, it kept going up. So this looks like typical normal market action to me. I'm fine with it. And I actually think that this is better and healthier than the kind of market action that we had in 2020 when, everything just went straight up and there was no stopping it. And basically the top blew off in 4 months. At least this looks like it should last longer. The fact that we actually get these kind of pullbacks means that this bull market should last longer, because the crazier it gets, the faster it gets, the less long it's going to last. Okay. We need to keep this thing contained in order to keep things from getting too crazy. Okay. So I'm pretty happy with what's happening, and the fact that we got this pullback should be good. And let's see if we can actually get some sort of rally, that Santa Claus rally. We might actually be in process of that, since we had that big pullback on Wednesday. This might actually be the beginning of a rally. So we'll see what we get. Overall, I'm still happy. We still have a lot of positions on, and this market is treating us well. Okay, guys? We'll see you at the next one. Take care. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.